Hello everyone and welcome back to the channel. In today's video, we're going to look at markets under 600,000, all of them which have some level of price momentum. These markets are all moving upwards, but the difference is that they're moving at different speeds and they've had different levels of growth in the past. Now, if you look at the Australian property market in 2020 to 2022, during that COVID phase, pretty much every property market was booming. And then we saw that 2022-2023 period where different markets started moving in different trajectories and at different speeds. And therefore now we need to be very selective of which market we're going to enter into. So in this video, I'm going to look at markets under 600,000 which are moving upwards, and I'm going to talk about the pros and cons of investing in these markets. So if you're looking to invest under 600,000 in Australia, this video is for you. Hi, for those of you who don't know me, my name is Jadhu Srikandan. I'm a buyer's agent for property investors and I buy properties all around the country using a data-driven approach. So if you want to work with me, go to my website propertyframeworkbuyersagency.com.au and book a session with me there. Now, I'm going to categorize these markets into different groups. Now, the first group is what I call hotspot markets. So where are our hotspot markets? Our hotspots are essentially in Queensland and Western Australia predominantly. So which are these hotspot markets? The markets in northern Queensland, markets like Townsville, Cairns, markets in central Queensland like Gladstone, Rockhampton, and then Nakai. And then if we look at Western Australia, we have markets like Geraldton and Bunbury. Now, what is the common feature in these hotspot markets? We're seeing a lot of demand, there's very low supply, there's a lot of investor activity in these markets, but at the same time, we also see demand from locals on the ground. And typically in these markets, the prices are getting pushed up really fast. So the pros in these markets would be that you can get short-term growth, maybe over the next 1 to 2 years. But the cons would be that you are in a markets where they've had significant levels of growth. Now these markets, these hotspot markets, all of them have been moving up since 2020. So we're about 5 years into the growth cycle of these markets. And typically when we're seeing these markets moving this fast, the growth isn't going to be sustainable. At one point, we're going to see that growth rate slow down and eventually these markets will start plateauing. So the con would be that they've had a lot of growth. Most of these suburbs in these markets have doubled in value, in some cases more than doubled in value. So we are in markets that have seen a lot of growth. So again, that con is that you might not see growth after 2 to 3 years, or you might see slower growth after 2 to 3 years. In terms of how stable these markets are, I would say Townsville and Rockhampton are really stable and they're good for long-term investments. The other markets like Mackay, Gladstone, Bunbury, Geraldton, these markets have been cyclical in the past and therefore you have to take some level of caution when entering these markets. But of course, things have changed here. There has been a lot of internal migration. The economy has now started diversifying, but it's something that you have to take note in the back of your mind. Now, these are the hotspot markets. Now, let's move to the second category, which I call markets which are pretty much in the early stages of the cycle. And I have two areas here. One is Darwin, which is the Palmerston region in Darwin. Another one is Melbourne, which is the Hume region in Melbourne. I've done detailed videos comparing Darwin and Melbourne. So if you want, check out those videos, which really go into detail about these two markets. Now, why am I saying Darwin is looking good and why is it early in the growth cycle? Now in Darwin, you could find something in the Palmerston region in the high 400s and these could rent out for about 6% rate yields. This area hadn't pretty much done anything over the last 10 years and now we are seeing on the ground some positive signs of activity. There's a lot of investors coming into the market, buyers agents in the market, and there's some push coming in from the locals on the ground as well. So if you're looking after rapid capital growth of the next few years, then Darwin could be a market for you. That's the pro of this market. The con would be be that Darwin is a bit of a transient city. They had cyclical growth in the past, so you have to be careful. I would say you need to correctly time the entry and the exit into the market if you're getting into Darwin. Okay, now let's look at Melbourne. I'm looking at the Hume region. Now there's other regions like the Frankston region which is really picking up strongly, but today I just want to focus on under 600. So let's look at the Hume region. With the Hume region, yes, it's pretty good. Rental yields aren't excellent, but they're not too bad, around 4.5% in general, and we're seeing positive price pressure coming here. The only downside and the con with the Hume region is that these areas, the affordability is stretched. The incomes in these areas are low, and at 600,000 price points, the affordability is stretched. So the question is, how long can you stretch that affordability? But at the same time, there's positive price pressure, and these markets are moving forward. So that's the Hume region in Victoria. Now, let's finally move to two other markets which I want to mention. Now, the data doesn't really reveal anything particularly strong about these markets. I'm just seeing nothing special on the data side, but on the ground, I'm seeing things starting to change, especially properties that are priced lower. There's a lot of competition coming in these markets, okay? I'm talking about Albury in NSW and Bendigo in Victoria. Now, if you look at Albury and Bendigo, what I'm seeing is on the ground is that there's a lot of competition for lower priced properties, and that's starting to push these under 500 properties up, okay? With these properties get snapped up quickly, and therefore opportunities for, if you can buy anything under 500 or just around that 500 mark, there's opportunity for those to move up in value fast. It's not really clearly reflecting in the data, and it's only being seen on the ground at this stage. And so these markets would be Albury and Bendigo. I think these markets over the short term, I don't expect significant growth. I don't expect boom-like conditions in these markets, because if you look at their 10-year growth rates, they've already done like 70, 80, 90% and above, right? So over the 10 years, they've done a fair bit of growth. And therefore, while these markets are recovering, they're going to get single-digit growth. It's not boom-like conditions that we saw in Queensland. The growth would be at a much more slower and steady pace. So who is this market going to suit? This market is going to suit someone who wants a low-risk, set-and-forget long-term investment, because these markets are really stable, really solid, and it will suit the investor who wants to invest for the long term. So let's summarize. So Queensland, the hotspot markets, this is only if you want really short-term growth. If you're looking for something that will perform over 5 years, then maybe this might not be for you. But that short-term growth could be significant, like 20 to 30%. Now, if you want really solid growth, short-term growth, and you want a marker that can is early in the growth cycle, then go to Darwin. The only downside here is that you need to time the entry and the exit into the markets. And thirdly, if you want something that's a set and forget investment, then go to markets like Albury and Bendigo. Those would be your long-term safe market. So guys, that's it from me for today. I just hope I gave you a clear overview of these markets. If you have any questions, let me know in the comments below, and I'll see you in my next video.